that we like quality as an investment style is that over the last 40 years or so, quality as a style has delivered pretty strong risk-adjusted returns. One of the factors that drives this is that quality companies typically have a very strong competitive position, usually driven by network effects or a brand or some feature of the business that helps to protect profitability from the impacts of competition over time. One of the other reasons that we like quality as a style is that in difficult economic environments, both from a fundamental and share price perspective, they typically perform relatively well. And one of the factors that drives this is that quality businesses have high margins. This means that they're able to protect profits from the impacts of rising costs. They have pricing power, which means they can pass on those rising costs to their customers. And lastly, they typically have some exposure to underlying structural growth trends within the economy that mean that even if growth is lower than is expected, they should still be able to grow and compound cash flows over the long term. And that's what we think is really important for share price performance. Over the past 12 months, we've made some changes to portfolio positioning. At the sector level, we've been reducing some of our exposure to information technology. So we've been reducing positions such as Taiwan Semiconductor and Broadcom within the semiconductor industry. We've also been reducing exposure to US healthcare companies. So for example, we've exited Humana and United Health in the managed care category due to concerns over regulation and the future growth outlook. In terms of our consumer portfolio, we've been rebalancing our consumer portfolio away from more cyclical areas of the market and towards areas that we think should be more defensive in what will be a difficult consumer environment over the next 12 months. From a regional perspective, what this means is that we've reduced exposure to the US, but the US still remains quite a significant part of our portfolio and a very important part of our portfolio. We've also been increasing exposure to areas in Europe and areas in the UK, where we still find very good quality business, but still trading at just a little bit more of an attractive valuation.